he's kept the repo rate and I think the reverse repo rate obviously unchanged as well. So repo rate unchanged at 8%, reverse repo, I'm sure it's that. Now we just wait for the CRR and the SLR ticks to come out and whether or not there's been a change there. But the initial comment, unchanged?
Absolutely unchanged. That's what everybody expected. So I think he's playing true to what the market expected. Absolutely.
CRR unchanged at 4%, Maithili.
Again, okay. So no change as far as tweaking of the way you compile it, the way you compute it. So that clearly means he is not given into the market's demand for greater freedom on the liquidity front. So he's held firm.
Okay. So essentially this is the verdict, just the initial verdict. We're still waiting just for the SLR thing to come out, but repo, reverse repo unchanged, CRR unchanged as well. Just get in the SLR ticks in a bit and whether or not there's been some tinkering there. But, okay, SLR has been cut by 50 bips to 22% from 22.5%. Maithili, bang on. Okay, let's first get in Anirudh from the RBI headquarters. Anirudh.
Yeah, Neeraj, as you mentioned, the SLR has been cut, and as on expected lines, no other moves has been taken by the RBI. So as far as the guidance is concerned, they've said that the kind of inflation growth scenario at this point of time does warrant a very vigilant stance by the RBI. So going forward, he's not given any timeline as far as when and what kind of rate cuts could come in. He's in fact given a slightly hawkish tone as far as the scenario going forward is concerned. He's also said that inflation risks are pretty much on the high side. There's also one technical aspect of the policy statement in which he's actually brought down the HTM category by about 50 basis points as far as the SLR securities are concerned. But all in all, pretty much on expected lines, apart from the fact that not too many people would have expected a 50 basis points cut in SLR. That, of course, is going to put in a significant amount of money into the markets, and thereafter, banks will be able to lend that amount of money going forward. But as far as the policy stance is concerned, many are going to actually possibly call it a slightly more hawkish stance as far as the inflation outlook going forward is concerned. But as far as growth is concerned, the RBI does maintain this time that growth will be.
Thanks for those key statements, Anirudh. Those are the three key statements that we've gotten. Now, just a couple of other things. Inflation target of 8% by 2015, but says that there is a risk to the 2016 inflation target. It still is on the upside. Maithili, two comments from you before we go to our experts. SLR cut by 50 bips. Was it slightly more than what you anticipated? And what I mentioned about on the inflation front, is that a surprise?
Not really as far as inflation is concerned, because as I said, 8% 2015 seems, within the realm of possibility. But that 6% for the subsequent January 2016, that's going to be very difficult. So they would maintain a fairly hawkish stance on inflation. As far as SLR is concerned, actually the basis points cut 50 or 25 really doesn't make very much difference for the simple reason that most banks are holding excess SLR as on date. So it's not going to make much difference, but this is a facilitator. Because as and when credit demand from the private sector picks up, to that extent, you will not have government preemption. But mind you, government has a huge borrowing target this year. So if banks are not compelled to actually maintain that SLR, they might not buy government securities. And as you can see last week, there was a devolvement, the third devolvement in this financial year. So the RBI has to kind of, do multiple things, growth, inflation, you're the merchant banker of the government. So you're responsible for government's borrowing going through also. So it's a very, very difficult task. So when you cut SLR, you also have to worry about what happens if banks just don't buy government securities. Where does the government go for its borrowings? So as of now, I think it will not make much impact, but you're sending a signal for whatever it's worth to the government that don't expect much support from the Reserve Bank of India. Buddy, you get your act together. If you borrow too much, you will have to find your buyers for your bonds.